Hey team, in this video we will be analyzing and forecasting the market for gold, also known as Xauusd, from a technical perspective for 25th till 26th February. So let's begin. We are currently on a 4-hourly chart, and here what we can see is the market is showing a descending movement or a bearish momentum since some around starting of the year. So this year have been a bearish year for the gold, and now what we can expect are two scenarios: either a retest towards this particular support zone and a bullish momentum, or a retest towards this particular support zone and the market isn't able to hold, and we did see then we will see a particular bearish momentum downwards, which would be targeting an area of 1600. Now coming on to the trading opportunities, let me highlight draw the descending channel. This would be the resistance of the descending channel. Let me make that an end zone so we do not caught up any fake breakouts. And this would be the support of the descending channel. Here we go. Let me make that to an end zone. So here we can see on the screen we have made an descending channel. Now going on to an smaller time frame of an 1 hourly chart, on which we would be coming on to the trading setups or the trading opportunities for 25 and 26 February. And if you are new to the channel, so do consider subscribing. So coming on to the 1 hourly chart, and here what we can see is that more movements in a greater time frame or in a smaller time frame with more candles being formed. Now coming on to the trading opportunities is that we would be looking for both long and short positions for the gold, as current fundamentals are suggesting both things. The bullish for the gold, the fundamental which suggests bullish for the gold is the stimulus packages, and the fundamentals which suggest bearish for the gold is the rising yield or the treasury bond, which is inversely proportional to gold, which means when the treasury yield bond increases, the prices of the gold will simultaneously decrease, as the people are taking their money out of gold and investing in the treasury bonds. Now we have both bullish and bearish news in the market, thus we cannot rely purely on the fundamentals. So we would be taking support of technical analysis on taking the position. So a long position could be triggered if the market did close above this particular resistance zone which I am drawing. Here we go. So a long position can be triggered into two scenarios. The first scenario is that if the market did close above this particular green resistance zone, which means the market closing above 1799 or 1803, in a range of 1799 till 1803 on a 4 hourly or on a day chart, would give us a signal that we should go long for the gold, as we can see that the gold would break this particular resistance zone. Thus market closing above this particular resistance would suggest us to go long for the gold. So our risk to reward ratio would be, as our stop losses would be placed somewhere around 1991 with our entry to go point of 1799, and our take profit would be of this particular resistance zone of some around 1826 till some around 1820. So this trade will give an risk to reward of approx 1 ratio 2.72. Now coming on to another bullish scenario, is when the market did retest towards this particular support zone, and this support zone is a very strong or a major support zone as since past 6 months, whenever the market did retest towards this particular support zone, market have retested always. Thus this is acting as a major support zone. Thus market retesting this towards this particular support zone would give us a signal that we can go for a long position with our take profits would be of this particular resistance zone. As let me show you. So our take entry trigger point would be some around 1770 till some around 1765, with our entry trigger point of this particular resistance zone, which is some around 1788, and our stop losses would be just placed below the support zone some around 1758. This trade will give an extra reward for approx 1:2. Approx 2. Now coming on to the bearish scenario, we will only see one particular bearish setup or bearish scenario, which is when the market did close below this particular support zone. Thus market closing on a 4-hourly chart or on a day chart below 1748 till some around 1740 would be a very major bearish signal, which would be a strong signal for that the market for the gold would continue its bearish momentum, and our stop loss would be also hit. Our stop losses would be also hit of our long position. So in order to recover our stop losses and in order to make some profit, we can go for a short position with our stop losses would be placed somewhere around 1763, with our entry trigger point of some around 1749, and our take profit would be placed some around 1717. So this trade will give an index reward of approx 1:1.27. If you are new to the channel, so do consider subscribing. If you like the video, do like, share and comment below. Thanks for watching.